Hello, this is Jay King, and I'm coming to you from MillionairePennyStocks.com. And today I want to talk to you briefly about trading with skills and strategy. When you start off as a newbie trader, you're going to have to identify a strategy in the stock market. Now, one of the things that you're going to have to learn is, are you going to be a pattern day trader or are you going to be a swing trader? These are really two important terminologies. A pattern day trader is usually in and out of the market within 5 to 10 to 15 minutes. Sometimes pattern day traders wait for an hour or 2 hours. Myself, I am a pattern day trader, but sometimes, like I said, I wait for an hour or two once I buy a stock or I short a stock to exit. And a lot of times I don't really hold stock overnight when I'm doing pattern day trading. And pattern day trading just simply means that you can make more than one trade throughout the course of a day. And pattern day traders, primarily, we look at daily charts. So we get familiar with daily chart patterns with the price swinging from its lows and its highs. And we look for support levels and resistance levels, which I will talk more about that. But pattern day trading a lot of times doesn't work out for people that have full-time jobs or their schedules are not as flexible. So one of the things that I want to do here, I want to make your experience as professional as possible, but I want you to have the best experience working with MillionairePennyStocks.com. And if pattern day trading is not for you, then one thing that may work for you is swing trading. And we call swing trading, what I call swing trading is it's still a short-term approach, but a lot of swing traders, they hold on to stock maybe for 1 day or 2 days. Sometimes they may hold on to it for 6 hours or 8 hours. But what I suggest is this: if you become a swing trader, remember, a swing trader is simply a trader that holds on to stock a little bit longer than a pattern day trader. In other words, it's still a short-term goal. When you enter into a trade, you enter into this trade, but you're going to be patient. You're going to wait a little while to see if the stock maybe may break out into new heights. You may decide to buy 600 shares at $1 and just hold on to it for a while, maybe for 1 day or 2 days, or maybe for 8 hours, or maybe for the next day. You kind of, when you're a swing trader, you're going to have to be patient, because one of the things I will say as a swing trader and as a newbie, if you're starting off in the stock market as a beginner, you want to purchase a small amount of shares when you're swing trading. This is really important. Right now, every quarter, we do know that companies, they report their quarterly earnings. And some companies that have bad results, their stock price will decline tremendously after market. So one of the downsides about being a swing trader is you have to be really careful, because if you hold a stock overnight, sometimes it can receive maybe negative information. It can be a bad catalyst. It can be a bad press release, and it will be a reflection of that during pre-market or even after market. So we always encourage, if you're going to be a swing trader, to either buy or short a small amount of shares. That way you can minimize your risk a lot easier. Now remember, a pattern day trader is someone that is looking to capitalize when they go into the market. Now remember, as a pattern day trader, you set goals before you even enter into the stock. If I'm going to buy a stock at $1, I already know how many shares I'm going to purchase. I already kind of have an idea. If that stock goes down to 95 cents, then I'm going to exit. I already know how many shares I'm going to buy. I may buy 1,000 or 2,000 shares, and I'm out of that trade. And so that's kind of how I minimize my risk and I manage my risk, is through pattern day trading. I'm in and out. Now, if I decide to swing trade, which I do swing trade sometimes, a lot of times I find myself buying a less amount of shares. I may buy 500 shares or even 300 shares. I had a student of mine that bought Twitter. She only bought 200 shares of Twitter at 11.41. And it jumped all the way up to 14.60, and she sold and she made about a $600 to $700 profit. And that was a wonderful trade. That was a swing trade. She held on to it probably for about, I would say, 2 or 3 days. But she bought a small amount of shares that only cost her about $2,500 for 200 shares, right at 11.41, somewhere around there. And so the risk was very minimum. And so if you're going to be a swing trader, you're going to have to know that your entry points are very important and your exit points are very important. When you enter into a trade, it's really important, and when you exit a trade. So what I'm going to start doing for many of my students is I'm going to let you know when we send out our alerts, and when we email you, we're going to let you know that these stocks would be good to swing trade. or these stocks are more for pattern day trading. I think this will help you identify a good core strategy, because there's a lot of stocks that I have now on my watch list that would be good for swing trading. And like I said again, when you're a swing trader, you still can stay in a stock for 1 or 2 or 3 days, even a pattern day trader. I'm a pattern day trader, and sometimes I hold on to stocks for 1 week. So it doesn't necessarily mean that all pattern day traders are in and out, and we don't have any other strategies. But sometimes you may want to go long in a stock. You know, if you get some good information about a stock and you get a good entry point and this company's really growing, the financials are growing, you may decide to go long. I made over $100,000 in Facebook stock. I bought this stock March 2012. I believe it was May 2012. I didn't buy it then, but I waited for the IPO to come out and for the stock to kind of lose momentum. A lot of people bought into that stock. And you know, you never want to chase the IPO. There's a lot of investors that already have inside trading access into a lot of those stocks, and they've already taken positions. And once people chase these IPOs, most of them have already came in at about $20 a share. And so when they launch the IPO, it's going to be about 40 or 50, and they're going to sell and make their money. And so I never chased IPOs, but it was really fortunate. I bought about 2,000 to 3,000 shares at $28, and I held on and I sold at 90, I think 9. So I had like a 70-cent spread, which I made over 140,000 in Facebook. So I went long on that. I wasn't a pattern day trader. I wasn't a swing trader in that trade. I went long. I recognized that Facebook stock probably would break 100 because of the momentum. And also, you know, Facebook has some wonderful things that they're doing. They're monetizing their site really well. They have great financials, great innovation. They work with several different companies to leverage their creativity. So Facebook is a wonderful stock. I wouldn't buy it now in the $100 range. I think it's pretty much, that's where it's valued at, is at about $100, $105 a share. I don't think we'll never have a Google experience where it goes up to $700 or $800. But again, when you're starting off trading, understand that you can identify what strategy you can use, and this will actually help you. Being a pattern day trader probably will help you identify who you are versus being a swing trader. Most people that work full-time jobs, they're going to probably look at the swing trading. Swing trading, again, is when you are entering into a stock as a newbie, as a beginner, and you're more patient. It's still short term. Pattern day trading and swing trading are still short term, but the difference is pattern day traders look to get in and out, usually within the same day. But a swing trader kind of sits back and they purchase a small amount of shares if they're a beginner. Now, if you're not a beginner and you have a lot of experience, you may purchase more shares, but I suggest to you to swing trade first if you're beginning. And remember, when you enter into a stock, your entry points are really important. We'll talk a little bit more about entry points on another lesson, and exit points. But I wanted you to understand that there are two different types of traders. There's pattern day traders and there's swing traders that I want to focus on today. And many people that start off trading, they want to know, well, what do I do? How do I begin? Well, first of all, you want to start off paper trading and open up an account at howthemarketworks.com. And once you open up an account with $1 million, look for our club, Millionaires Boys Club, BOYZ Millionaires, or Millionaire Boys, BOYZ Club Challenge, and enter into that challenge with us. And I'm continuing to teach a lot of our students how to trade. Now remember, as a beginner, you're going to have to identify based on your schedule and based on your work schedule and your time schedule. I know people have jobs and people have families. You're going to have to determine, are you going to be a pattern day trader or a swing trader? Now, many people that have that work second or third shifts, some of you go into work around 2 or 3 o'clock in the afternoon. I would suggest not paper trading, but I would suggest paper trading, but I would suggest you becoming a pattern day trader if your schedule is very flexible. And either if you have a flexible schedule or you go into work around 1 or 2, 3 o'clock, pattern day trading would be wonderful. But if you don't have a flexible schedule, and let's say you go into work in the morning at 8 or 9 o'clock, I would suggest being a swing trader. Again, this is Jay King coming from Millionaire Penny Stocks. Have a great day.